This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Strengthening storm. Refiners are shutting down. Gas prices are rising as it looks like the first hurricane since 2008 will strike Texas. Pressing agenda. Central bankers meet as the world's major economies expand, but there's considerable uncertainty for the global economy. Sticker shock. Healthcare costs in retirement are rising and are expected to go even higher. Those stories and more tonight on Nightly Business Report for Thursday, August 24th. Good evening, everyone, and welcome. I'm Sue Herrera. Tyler Matheson is off tonight. Hurricane Harvey is heading straight towards the center of the U.S. energy industry. Forecasters say it could strengthen before it hits land tomorrow. Its track, while still unpredictable, could threaten 1/3 of U.S. refining capacity. The price of gasoline on the commodity markets have begun to rise, and some refiners began to shutter their operations, which lifted shares of a number of refineries. Jackie DeAngelis has more now on Hurricane Harvey and its potential impact on the energy market.
Tropical storm Harvey is gaining steam, and it's expected to be a hurricane that lands in Corpus Christi tomorrow. There's some speculation it could become a Category 2 hurricane, which would mean the chances for heavy wind, flooding, and damage are high. We haven't seen a storm like this in that region in almost a decade, but these events do tend to spike crude gas and natural gas prices because a lot of the facilities are down along the Gulf Coast. A bad storm could shut down refineries and cut off imports and exports in the area. From that refining standpoint, there are 6 main regions and a little less than half the nation's refining capacity at stake here. If a Category 1 hits a refinery, it takes about a week to get back up. Category 2, and more like 2 weeks. The energy markets are not in panic mode right now, but traders who recall past storms say prices will move very quickly if this storm packs a bad punch. For Nightly Business Report, I'm Jackie DeAngelis.
Shutting down a refiner is a complicated task, and it impacts gas prices. Getting one back online after a big storm is even more complex. Sharon Epperson explains how it's done.
Getting a refinery back online after a full shutdown due to a hurricane or major storm can be a lengthy multi-phase operation. The first step, returning evacuated personnel to the refinery, could take a few days, depending on conditions in surrounding areas. Once on location, the crew evaluates the storm damage, like flooding or down power lines. If the power is out, the refinery has to wait for local utilities to restore it. Once power is back, the team will restart the refining units. This is done in the sequence of the actual refining process. At a large facility, there could be dozens of machines in the lineup, and each individual machine might require a day or 2 days to start up. But in order for the refinery to get back to business, it needs crude oil to process. However, storm damage could be trapping the oil tankers, and therefore supply could be stuck offshore. All told, it can sometimes take up to 2 weeks to get a refinery up and running again. And even a small facility could require as long as 7 to 10 days.
So what does all of this mean for gas prices? Could we see a spike? Let's turn now to Patrick DeHaan for some answers, and he is the senior petroleum analyst at GasBuddy. Patrick, welcome. Nice to have you here.
Thanks for having me.
Of what we know right now of the storm, how big an impact do you think it might have on gas prices and the refineries?
Well, first of all, this is a pretty dramatic turn of what happened this morning for this storm to go from a Category 1 on landfall. Now forecasters, some of them, saying it could get up to a Category 3, maybe even a 4. The more intense and powerful the storm, the longer we're talking about downtime and the more possible impact to gas prices. So if this storm is a Category 3 or 4, it could mean refineries are down for 1 to 2 weeks, maybe even longer. And the longer we go, it's kind of an exponential rise that we can expect in gas prices. Right now, there's kind of a low to medium risk of prices nationally going up 5 to 10 cents, but that could greatly change as this hurricane continues to gain strength.
What are you going to be watching for in this particular storm? I've heard various different predictions. One, you just mentioned the category of the particular storm. The other is how long it lingers over land, which might really affect the refineries more than if it just moved through very quickly.
Yeah, that's right. I think that's the biggest potential of this storm sits and surges and drops rain all over the area. I think the primary concern I would look at is flooding, storm surge, And of course, power outages, how long the power may be out could greatly impact things as well. But right now, I think the key risk is water. You're talking about measuring rainfall not in inches, but in feet. That could be a big problem for these refineries that are tremendously complex.
Are there certain parts of the United States that you think might see the spike in gas prices, or at the very least an increase in gas prices, rather than other parts of the U.S.?
Almost certainly the Gulf area. That's the primary market that these refineries serve. So you'd be talking about the South, the Southeast, maybe even the Mid-Atlantic, because of the massive Colonial Pipeline, which runs all the way up to New Jersey, does pick up supply from Gulf Coast refineries and starts to head up the East Coast. So primarily those 2 or 3 areas, South, Southeast, and Northeast. But keep in mind, there is a sympathy factor here that refineries in other areas of the country, mainly the Gulf Coast and the Great Lakes and the Midwest, may start actually sending gasoline down to the Gulf. That could bring prices up in the Great Lakes as well.
All right, on that note, we will keep our fingers crossed and hope for the best. Patrick, thank you very much. Patrick DeHaan with
pleasure.
Gas Buddy. On Wall Street, stocks wobbled between gains and losses ahead of a speech by Fed Chair Janet Yellen tomorrow at an annual gathering of central bankers. We'll have more on that in just a moment. The Dow Jones Industrial Average fell 28 points to 21,783. The Nasdaq was off 7, and the S&P 500 was down 5. House Speaker Paul Ryan is pushing the Republican plan to cut corporate taxes and simplify individual returns. Today, he discussed the need for reform with a group of Boeing employees at its plant in Everett, Washington. And his discussion on taxes came just hours after President Trump blamed congressional Republican leadership for what he called the mess awaiting them this fall as they seek to raise the debt ceiling. Elon Mui traveled to Washington to talk to Speaker Ryan.
House Speaker Paul Ryan taking the case for tax reform on the road. He was here in Everett, Washington, touring a Boeing facility and talking with employees as well as the company's CEO, Dennis Muhlenberg. But President Trump threw a wrench in the tax reform message with a tweet that blamed both Speaker Ryan and Senate Majority Leader Mitch McConnell for not having raised the debt ceiling yet. I sat down with Speaker Ryan for an exclusive interview, and here's his response to President Trump.
I don't really take it as going after me. Look, that's an option we were looking at, but the VA deadline came up and we weren't able to do that then. I'm really not that worried about this. We have plenty of options ahead of us. We will pay our debts and we will make the debt limit. We will hit the increase before this is penetrated, meaning we will pass a debt limit increase before we hit the debt limit. Plenty of options in front of us. That one just wasn't available for us.
Do those options include a clean hike of the debt ceiling?
There's a bunch of different options in front of us. I'm not going to kind of negotiate to the media, but we have a lot of options in front of us. I'm really not worried about getting this done because I know we will get this done and we will pass the increase before we hit the debt limit.
The tax reform is Republicans' signature issue. Paul Ryan wants to simplify the tax code and rewrite it completely, but that could mean taking on some popular deductions like the one for mortgage interest.
We recognize, acknowledge, and believe you need to maintain the mortgage interest deduction. Whether it can be improved and how it works, that's a decision and the discussion we'll have on an ongoing basis, and that's what the Ways and Means Committee has all their hearings and process for. The point being, we're going to maintain some of those critical things because we think they're very important. Home ownership, charitable giving, saving for retirement, these are things that everybody needs to do, everybody wants to do, in conjunction with a dramatically simplified tax code.
Ryan acknowledged in our interview that tax reform is going to involve some hard trade-offs and that every household and business is going to have to be willing to give up some goodies if we want to lower rates across the board. For Nightly Business Report, I'm Elon Mui in Washington State.
Mortgage rates are now at their lowest levels of the year. According to Freddie Mac, the average 30-year fixed rate fell to 3.86%. The rate has dropped for 3 straight weeks. Yields on the 10-year Treasury have fallen during that time as investors put more money into safe haven government bonds. Mortgage rates tend to closely track the yield on the 10-year note. It was a disappointing week for the housing market with yet another weak sales report out today. Existing home sales unexpectedly fell last month. Yesterday, you might recall, we told you sales of newly constructed homes also dropped. Diana Olick explains why buyers are holding back.
July sales of existing homes fell to the lowest level in almost a year, well below expectations, and realtors put the blame squarely on supply.
The investors have gobbled up many of the properties, and when the market was down, and therefore there's very little available for home buyers for owner occupancy at the lower price points.
And that is where most of the demand from younger first-time buyers is. Builders aren't helping much either, still focusing on move-up product, even though their sales slumped in July as well. The inventory of homes for sale has now been dropping for 3 straight years and pushing home prices to new highs. July's median sale price for an existing home hit a new record. Part of that is just because more high-end homes are selling. At the start of 2013, when home prices were just beginning to bounce off the bottom of the housing crash, the share of homes sold above $500,000 was just 9% of all sales. 40% of the market was homes priced below $100,000. Today, that high-end share is more than 14%. The low end is less than 10%.
Some are even calling it an inventory crisis with no turnaround in sight, not even in the dog days of summer when demand usually wanes and supply is able to rebuild again. For Nightly Business Report, I'm Diana Olick in Washington.
Housing is indeed a key part of the economy, but overall economic growth has been muddling along. That's just one of the issues that will be discussed by Fed Chair Janet Yellen and other central bankers at the annual gathering of policymakers in Jackson Hole, Wyoming. And that's where Steve Leisman is tonight.
When the Fed gathered beneath the Tetons a decade ago, they worried about recession and a looming global financial crisis. Circumstances are different and somewhat better this year for the annual Kansas City Fed Symposium, but issues are still pressing. For the first time in a decade, the world's major economies are growing. Instead of being on the verge of buying assets and cutting interest rates to battle recession, the Fed is hiking and near a decision to sell assets perhaps as soon as September.
You saw the minutes of the last meeting. Markets are expecting any time now, looking at September and out. That is always a function of what issues are going on when we meet to make that decision. But I think the setup is there, describing how that would happen and the approach that the committee would take.
But there's still considerable uncertainty. Complicating the outlook is a potential government shutdown next month that could give the Fed pause if it really happens. And President Trump hasn't yet decided who he'll pick to head the central bank, so this could be Janet Yellen's last meeting as Fed chair unless she's reappointed. Also unclear is whether Congress and the president will succeed at delivering fiscal stimulus in the form of tax cuts or infrastructure spending. And the Fed is debating why it continues to miss its inflation target and whether it should hold off raising interest rates again until it gets close to its 2% inflation target.
The issue, as you know, is about inflation, and I think I'm really trying to weigh the conflict between the cyclical factors, which should be creating more inflation, although with a lag, and some of these structural factors like globalization, technology-enabled disruption that are muting pricing power of businesses. And I'm not saying that we won't act by the end of the year. I just want to be, I think we have the ability to be patient here and see more information and see how these forces unfold.
Meanwhile, European Central Bank President Mario Draghi is set to speak Friday as markets speculate whether he'll announce plans to reduce stimulus on the continent next year. So it's the same majestic mountains, but a new set of issues. Global growth rather than recession, exiting easy monetary policy rather than launching it, and potentially new leadership on the way at the Federal Reserve. For Nightly Business Report, I'm Steve Leisman in Jackson Hole.
Still ahead, Amazon is coming out swinging, and that means cheaper items at Whole Foods starting Monday. Shares of retailers that sell groceries fell after Amazon said its acquisition of Whole Foods will close Monday. And starting Monday, customers will see an immediate markdown in prices on a number of items like avocados, organic salmon, and baby lettuce. Amazon said it will continue to lower prices at Whole Foods stores and will eventually offer special discounts and benefits to Amazon Prime members. There are concerns among investors that that move could start a broader price war. And as a result, shares of Kroger, SuperValu, Costco, and Walmart all fell pretty dramatically. And on a day that saw grocery stocks fall, some traditional retailers saw their stocks trade higher after reporting upbeat earnings. It's not often that shares of Guess, Abercrombie & Fitch, and Signet and Perry Ellis see double-digit gains, but that's what we saw today. And Bob Pisani tells us if there's a glimmer of hope in the retail malaise.
It's been a generally dismal retail earnings season, but in the last few days, several retailers, small ones, have reported earnings better than expected. Signet Jewelers, Dollar Tree, and Guess all beat and raised guidance. Tiffany beat and they affirmed guidance. So these are some glimmers of hope. Why? Because there is some indication that after a long and ugly couple of years, some kind of bottom may be happening. Now, many retailers reported a sequential improvement from the first quarter to the second quarter of this year, particularly in same-store sales. And after 2 quarters where overall earnings declined year over year, earnings in the second quarter for retailers as a whole rose 0.2%. But it's all very tentative. Here's the problem. No one believes that the disruption from Amazon or other online competitors is over yet. No one knows if the retail industry can ever return to any real growth. And no one knows who might even survive in the next 12 months. There's 24 companies that have gone bankrupt in the past 2 years alone, including Limited, Wet Seal, Radio Shack, Payless, Gymboree. Many that are left are ghosts. They're trading under $10. But hope springs eternal. Investors have been cheered by the recent spate of reports, so retailers as a group are up nearly 2% this week. But we've seen this movie before. Remember, investors were hoping for better news from the bigger retailers who reported earlier. They bought up the prices going into earnings season, and when the big guys like Macy's and JCPenney, they all failed to deliver, they sold them all off. We'll see if that happens again. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Weak coffee sales hurt results at J.M. Smuckers, and that's where we begin tonight's Market Focus. The maker of Folgers Coffee and Jiffy Peanut Butter said its decision earlier this year to raise coffee prices negatively impacted demand and contributed to that company's lower than expected revenue. Earnings also missed the mark, and Smuckers lowered its guidance for the full year. Shares fell more than 9% to 107.51. Hormel also slashed its forecast for 2017, saying higher raw materials costs would eat into profits. In the latest quarter, the meat producer reported disappointing earnings and revenue as lower sales of some of its products hurt results. Hormel shares were off 5% to $32.09. Roofing and building supplies distributor Beacon Roofing Supply is buying rival CRH's distribution business for more than $2.5 billion. Beacon said that deal will allow it to enter more markets in the U.S. and help growth in key product categories. Shares of Beacon Roofing Supply jumped nearly 10% to $43.54. CRH shares rose more than 3% to $35.56. And after the bell, Ulta reported profit and revenue that grew more than expected as shoppers spent more online and on higher-priced cosmetics. Same-store sales also picked up some gains, but they weren't good enough to beat expectations. The company also sees earnings for the current quarter below street estimates, and that initially pressured shares in after-hours trading, but they ended the regular day up fractionally to $233.71. Most people entering or living in retirement could see health care costs eat away at their nest egg. That's according to Fidelity. A 65-year-old couple retiring this year will need about $275,000 to cover health care and medical expenses in retirement. That's up 6% from a year ago, and it doesn't include long-term medical costs. Adam Stavisky is the Senior Vice President of Fidelity's Benefit Consulting Group, and he joins us now to talk about it. And, you know, it is up 6%, but it's up a lot more from when you first started doing the survey, 2002, I believe, right?
Correct. It's up a tremendous amount. Healthcare trend is one of the most unrelenting features in the economy.
Why is it so expensive? Is it because our healthcare system isn't efficient? Is it because we're not as healthy as we should be? Maybe it's a combination of all of those things.
Yeah, I was told we had 3 minutes. So yes, it's a combination of many things, and all of them continue to press on these costs. So people will have to understand that as wonderful as Medicare is, they still have a tremendous amount financially that they are obligated to.
When you talk to Fidelity clients and others, when you do this survey, are they at all aware of, or have they planned for how much this may cost them?
So our clients are the employers, and this estimate every year is, we hope, a clarion call to educate themselves to the obligation that they face. So the understanding is intermittent at best.
What are employers doing to help people, young and old, that are in their employ, to prepare for this type of expense?
There's a few different things. There's programmatically what they can do is do the benefits they offer their employees, allow them to avail themselves of all the different tax features that we have, whether it's the 401k plan, Roth, HSAs, a lot of different things. And then beyond that, they need to educate people so that they understand what, again, their obligations are, and they need to find a way to speak to them that's not all this gobbledygook about the complexity of healthcare, but in a way they can relate to.
I think most people who retire think that Medicare is going to be there for them. Now there's this whole push towards Medicare supplementary insurance, but I think it's difficult for people to think that they're going to need that much money. They don't want to admit that maybe they won't be in the best of health. They don't want to admit that they aren't prepared. This number's daunting, and there's no two ways around it. And so we hope that people will start to prepare as best they can. And the eventuality is that I think the onset and definition of retirement for working America is going to change. All right, Adam, kind of sobering, but at least you've put the clarion call out there, as you said, and maybe people can start saving sooner rather than later. Thanks for having me. Thanks, Adam. Well, coming up, why temperatures are rising in Miami Beach, and we're not talking about the weather, we're talking about the push to raise the minimum wage. Obamacare plans will be sold in every part of the U.S. next year. Today, nonprofit managed care company CareSource agreed to sell plans in a small Ohio county, which had been left without coverage when Anthem pulled out. While every county in the country will have an insurer, the Centers for Medicare and Medicaid said more than 1,400 could have only one insurer next year. State regulators have been negotiating with insurers to sell plans in counties where many of the big insurers have exited. Apple plans to build its next U.S. data center in Iowa. More than $200 million in incentives were approved by the Iowa Economic Development Authority. Apple plans to spend more than $1 billion to build 2 state-of-the-art data centers on 2,000 acres in Waukee. The project is expected to create 50 jobs, which pay a minimum of about $29 per hour. The number of Americans filing for unemployment benefits rose less than expected last week. Initial claims for unemployment benefits increased 2,000 to a seasonally adjusted 234,000. The latest data suggests a further tightening in the labor market conditions. Claims have been below 300,000 for 129 consecutive weeks. That's the longest stretch since 1970. And while the job market remains strong, wages have barely budged. And there's been a big push nationally to raise the minimum wage. That's a big focus for small business owners in Miami, which is the top city for startup activity. Kate Rogers has our story.
At Panther Coffee in Miami Beach, Florida, no worker makes less than $10 an hour. In fact, with tips, most entry-level workers take home an average hourly pay of $15. Husband and wife team Joel and Letitia Pollock say generous pay is essential to their business's success.
We can't have a business without a team. And if people come to work and they don't feel appreciated or they don't feel respected, I find minimum wage disrespectful.
But a battle is brewing in Miami Beach over raising the local minimum wage. City officials voted to increase it to more than $13 an hour by 2021, nearly $5 above the state's current minimum. But earlier this year, a judge ruled against that wage hike, and arguments are set to begin in appeals court this fall. The battle comes as the national push to raise wages grows. More than half of states nationwide now have wage floors above the federal minimum of $7.25 an hour. Advocacy groups like the Florida Retail Federation say a wage hike would damage local business growth and negatively impact workers.
So you're talking about mom and pop shops that have a really finite amount of money to spend.
One barbecue pork. Adam Meltzer, owner of the Daily Creative Food Company, understands the concern. He says any wage above $13 an hour would cause him to make some tough choices at his small business, where he also begins pay at $10 an hour.
we might run into some problems where we would have to actually decrease the amount of hours minimum wage employees worked. We also might have to raise menu prices, which would affect customers, which would also affect possibly the overall business as a whole.
But Miami Beach's mayor, Philip Levine, told us living on $8.10 an hour simply isn't doable in the city.
The question is, how do you live? Well, you live because the government's going to help you. They're funding you with subsidized programs, welfare programs, social programs. So basically, the taxpayers are subsidizing the cost of businesses.
One thing is for sure, entrepreneurs like Meltzer and the Pollocks will be closely watching this case as they make decisions about hiring and expanding right here in the city. For Nightly Business Report, I'm Kate Rogers in Miami Beach, Florida.
And to read more about the minimum wage debate happening in Miami, you can always head to our website, nbr.com. And finally tonight, the winning Powerball ticket was sold to a hospital worker in Massachusetts. She claimed the biggest undivided jackpot in history, more than $750 million. She chose to take a lump sum payment of $480 million, or $336 million after taxes. Today, she said it's all still sinking in.
I just want to sit back and relax, and I had a pipe dream, and my pipe dream has finally come true. I wanted to retire in 12, and it came early.
She said that before the news conference, she called her employer and said she would not be coming back. Can't blame her. That's Nightly Business Report tonight. I'm Sue Herrera. Thanks so much for joining us. Have a great evening, and we'll see you here tomorrow.